So, and of course, I understand you're not here to specifically comment on trade policy.
You were listening to lawmakers in the Senate's Committee on Banking, Housing, and Urban Affairs ask questions of Fed Chair Jerome Powell following his semi-annual monetary policy address. We're back with some reaction to Powell's testimony. I'm Brad Smith alongside Madison Mills. Powell reiterating a cautious stance on rate cuts.
With our policy stance now significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance.
Here to react, we've got Jon Hilsenrath, Senior Advisor at StoneX. Jon, good to have you here with us. He went on to say that at the same time, reducing that policy restraint too slowly or too little could unduly weaken economic activity and employment here. Just want to get your reaction to what we've heard in the tone from Jay Powell today in front of Congress.
Right. I mean, I think the story that comes out of today is that the Fed is on hold. There was some residual hope in the markets that the Fed might get soft enough inflation data to cut interest rates again, perhaps as early as March or April. It now looks like it's not going to happen until the middle of the year at the earliest. Not only is the inflation outlook uncertain, but the economic policy outlook is uncertain. And the Fed really wants to sit back and see how things play out for a few months before it makes any more moves on the chessboard.
Well, it's interesting because we await these comments with such bated breath, but then Powell is a master at leaving his options open. Did you get any hint of movement towards either a potential hike down the road or even just moving closer to taking a hike off the table from what Powell said today?
Well, you know, the longer they stay on hold, the fewer opportunities they have to cut rates later in the year. So their decision to take a wait and see approach maybe lowers the odds a little bit for getting in the 2 rate cuts that they talked about in December for 2025. But it's still really early days. To be honest with you, you know, the Powell has said that the Fed is data dependent. They're watching the data. I think what matters more than what he says over several hours today is going to be an inflation report that comes out in a few milliseconds at 8:30 tomorrow morning. The Labor Department is reporting consumer price inflation data, and it's going to be the data that really dictate whether and when the Fed goes again. And this report that comes out tomorrow morning, the CPI report, is really important because in the last few years, a lot of the big increases that we've seen in prices have happened early in the year. That's when companies are doing their resets. So we'll get some important indication, I think, tomorrow morning about whether, you know, we're on maybe a lower glide path for inflation going into 2025. That's going to matter a lot to Jay Powell. He didn't give any indication today of whether he kind of knows or expects what's going to be in those numbers.
So with regard to that, Powell also answered questions on President Donald Trump's trade policies. I want to play this clip and get your reaction.
It's not the Fed's job to make or comment on tariff policy. We, really, that's for elected people, and it's not for us to comment. Ours is to try to react to it in a thoughtful, sensible way and make monetary policy so that we can achieve our mandate.
And so, Jon, what we've continued to hear from economists that we speak with is that tariffs, to be clear, are inflationary when you do have some of the tit for tat that goes back and forth and there's more prolonged tariffs on the table here. I wonder your assessment and how long the Fed is willing to wait in order for them to be able to see the economic ingestion of that tariff activity.
So I'll say 2 things, one about tariffs and one about Jay Powell on his playbook for dealing with the president. In terms of tariffs, I think we have to be careful when we talk about tariffs and their effect on inflation about exactly what we mean. So there's an inflation rate and there's a price level, right? So the inflation rate is how fast prices are going up on an ongoing regular basis. What a tariff does is it increases the price of certain goods or services. It increases the price of imported steel or the price of cars. But that's a one-time price shock. It's not necessarily a permanent increase in the rate of inflation. So Whether that changes over the long run, the rate of inflation, I think is a little bit more heavily debated among economists. I think perhaps tariffs are a little inflationary because they undermine the kind of global system that's kept the inflation rate low. But I think the Fed has a mind that's open to the possibility that tariffs would be a one-time shock and not a permanent diminishment of their ability to get that 2% inflation rate every year, year in and year out. In terms of how Powell approaches these things, he has a playbook. He developed this playbook during the president's first term in office. And that playbook is stay focused on his mission. Powell wants to stay focused on his mission. That mission is a 2% inflation rate and low and stable unemployment. So he doesn't want to get into the president's business, in part because he doesn't want the president to get into his business. So he's just not going to answer those questions. Even though these policies create uncertainty for the Fed and they want to see how things play out, they don't feel like they should be playing the role of the sideline commentator, telling the president and in effect voters exactly what policies, economic policies, they should put in place.
And before we wrap, just want to get your thoughts heading into CPI tomorrow. Of course, a key reading on inflation that the Federal Reserve looks at. What are you thinking heading into that print, and what do you think that print could mean for the Fed moving forward?
Well, so, with these things, you have to go with a little bit of a gut sometimes. I mean, we know that, for instance, gasoline prices haven't moved much over the last couple of months. We know that food prices are up in areas like eggs. So those are the volatile categories. We might see some movement on the food side and the overall inflation side from that. In terms of core, everything else that's happening in the economy, I think that we've seen in the last couple of reports a little bit of softness that's been encouraging. And I think if we see some more softness in the inflation data this time around, then the market's going to be really pleased by that, and it'll be putting a mid-year rate cut back on the table. And I'll say one other thing. These reports are really important kind of across the board in financial markets. We've moved to this period where when it comes to inflation, good news is good news for everybody. It pushes down bond yields. It pushes up stock prices. It strengthens the dollar. There are certain times when, like if you see a weak jobs report, you say, well, like, why are stock prices going down when jobs are going up?
Right.
And that might be because people see inflationary problems. When these inflation reports come in around where the Fed wants them,